And good afternoon. Glad everybody could make it. Today we're going to go over why do brokers and institutions provide indicators for free? Why is that? And then remember, don't forget, if you're interested in the Pinnacle Institute on how to do this correctly, and I'll have this at the end of our session as well. We have an introductory workshop and an advanced workshop. So got everybody covered. So let's get started here. Here's a little picture of an indicator. I believe this is the MACD. And if you're new to trading, you look to these tools that are free, indicators and oscillators, what have you. And um, at some point, I was definitely involved, heavily involved into these until I learned how to trade correctly, which is using supply and demand. So in today's session, I'll take a look at live markets and go through a couple of these indicators that show when it's time to buy, when it's time to sell, and why they lag for the most part. You know, nothing's perfect, but this is by far uh, the least perfect percentage wise, and that's why the brokers and institutions, they want us to spend as much time as we can trying to perfect these tools. Let's move on. Couple of reasons brokers provide indicators for free. One, make clients believe that they are on the wrong side of trade. Pretty psychological, but it that's what creates emotional trading. If you don't like to lose, then trading may not be your um, your small hobby, or you shouldn't do it because there's going to be times when there is cost of business in trading. Okay. Go to our website, Nikki. Yeah, go to the pinnacleinstitute.com. Shar will show you how to get there. Yeah. And they always state that their indicator or indicators are the best. They have sometimes they customize them, and really, uh, I had a mentor in the when I started beginning was creating their own indicator, and he figured out that he was just creating a very complex moving average. There you go. Thanks, Shar. Yeah, Shar is here. You got any questions? Shar is here. Make sure you stay online as well. So just type it into the chat. And then always, yeah, and it's roughly in there on the same wavelength. There's not that much difference between my yeah, the successful average. Yeah, there's not that much difference. Okay. And they don't want the client to know the simple strategy of trading, which you'll learn here in the Pinnacle Institute, the Pinnacle method, which is just supply and demand. And they really do love when you, just what I just said, analysis paralysis is when you're trying to rebuild their indicator. There's probably some that are really good, but do you think they're going to give us that for free? Probably not. And then probably their indicator is still going to be lagging. It's not real time. The way we trade is live in real time. It's not. We don't have any indicators at all. The only indicators we have are supply and demand. Okay. All right. So we're going to go over the CCI. I don't know if anybody in here uses CCI, Bollinger Bands, or MACD. Okay. So if you use any of these, you'll see that there is a little lag. Now, you could mess with the format, maybe change it to carrying more data, what have you, but nonetheless, it's still lagging. Okay. So the question is, would you rather buy at the lowest low, sell at the highest high, or buy after after one of these indicators or oscillators tell you when to buy? Now, don't get me wrong. It's good to have a rule based trading strategy, which if you're following these, um, maybe you're doing okay. But if you really want to take it to a different level, definitely you need to look into your education and possibly look into supply and demand. All right, see what we have available. All right, with that, let's take a look at. I have a. Let's see. We'll start with CCI here. You're going to see the pound Swiss here. Now, which time frame do you usually trade on? Which time frame? And just for an example, I could use 4 hour daily, or uh, even 2 minute, 3 minute, however y'all want to trade. I can go day trading. Let's do that. I'll go. I'll go 30 minutes. Okay. I'll use just 30 minutes for now. Let me take off Bollinger Bands. It's a little. Let's see. Oh, there it is. Oh, I think I gotta come in here and see, remove. There it is. There it goes. Remove all indicators. All right. So here's a clean chart. This is pound Swiss, and we're gonna use all our examples on Forex. Okay. So right here on pound Swiss, if I was brand new to trading and I saw price start moving lower right here, then I would begin to believe that, oh, I'm going to go ahead and start selling right in this area, correct? But then I would go in and say, oh, here's some indicators, and the broker's giving them to me for free, so I'm getting a great deal, getting some free stuff. It's always great to get free stuff, which I agree with. Where's there it is. CCI. This is called the Commodity Channel Index. So some of y'all are familiar with it. So I'm gonna just click on this, and I'm gonna leave it just right at its current format, which is, I believe, 20 days. So 20 days. That's pretty much 5 days on a week, 4 weeks in a month. That's practically a monthly. Uh, uh, opportunity there, or um, data, grabbing all the data from 20 days. All right. So if we go back and start looking, let's see, let's look this week where, we take that big drop into account. And I need to blow this up a little bit. Let's see if it'll let me move this around. Oh, good. So here, uh, okay. I just wanted to make sure I was getting. So the CCI, they're pretty much, most of these indicators are pretty much the same. Um, so CCI is telling me, if you don't know how to use it, the simple way to use it is when this line, I wish I can get a better view, but this line here, if it goes over this is called the 100, I guess. Yeah, it's 100. This is 100, and the bottom is 80, I believe. Oh no, they're both okay. So it's negative. Let's see right here where they have these. Let me see real quick where they have these formats. So it's 20 days and 100. Okay, so it's 100 and 100. All right. So this is the top line is 100 and the bottom line is negative 100. So all this is saying is that, if to make it simple, is that if this line goes above the positive 100, then this is telling you it's overbought. Okay. So if I sell here, if I sell right here, then this is telling me it's overbought. So it's time to sell. So I sold it here. Oh, hey, it worked out. Great. Now I guess where do I get out here? So right here I sold it, and I'm not getting a buy. Where am I going to? Where's my target? So there's a couple of things there. Where am I going to exit? Okay, I sold it here. Where do I exit? Who's giving me the opportunity to exit? Nothing. So I'm still in the trade. Okay. Oh, it's telling me it's overbought again. It almost is telling me to sell, but we haven't crossed it. Okay. So here again, oh, it tells me to sell. So I have sold it. Okay. It's telling me to sell right here. So I sold it. Oh, wait. Okay. I sold it there. So I'm selling it again. Oh, hey, I did great. All right. Now it's time to buy. I'm overbought. Okay. Or oversold. This is overbought. My bad. So now I'm oversold. It's time to buy. Okay, I'm getting the buy. I'm getting bullish, and then it crosses. Oh, I'm buying. All right. So I bought, and it didn't tell me. I don't think I got the cross here. Let me see. Uh to sell yet. You could just say you sold. Okay, sold for that area. All right. So I don't know if you got yeah, you'd have to really dig down there. We'll just say you got out of the trade there. Okay. And pending whatever your trade strategy is. Let me see if I can use a. Here we go. I want to use this right here. Ah, there it is. So it did go over, and so I went ahead and exited my long. Now, just for that, I just took a short right there. Okay, so now I'm short, and let's see, where's that? Barely. Okay, we're back here. We're back here in this area right here. So I'm short. So I'm doing good, doing good. And then all of a sudden, I get oversold again. Okay. Oversold. Oh, okay. Oh, I get to buy. Time to buy. So I buy right here and I don't get to sell yet. So I'm still holding. Okay. I'm still holding. I don't have a stop because I'm new. Okay. So I'm still holding, holding. Oh, finally I get the overbought right here. All right. No, yeah, Nikki. I'm more or less talking about. This is more about the new traders coming in. Okay. Now there's ways to use these, but overall, I'm looking at advanced traders. Yeah, I mean we can have a session on that as well. But right now, overall, these indicators, the reason why they're free is they don't work. You see that? I mean, I can't. I don't have the exit. Okay, I don't have the exit, and now I just bought more. Okay, right in here, and then now because I don't have any knowledge. I don't have any knowledge. Let's see. So there's usually a combination of trend combined with momentum indicator and chart patterns that would give a signal for trade. Um, yeah, I mean, momentum is, and if you've been doing this a long time and you know what conditions are met for those types of opportunities and it's been tested, then absolutely. Yeah, that's what I'm saying. I didn't use when I started out Forex trading, and this is even before I, started doing education. I was using this thing called Nostradamus. And it's old. It's really old. And I remember my boss telling me that it was what are you doing? I'm like, this is Nostradamus, man. It's right. So they got all these tools, which was practically probably a form of CCI or something, being oversold or overbought. Okay. So that's what I'm pretty much talking about, Nikki. But good, yeah. We can go into a little more advanced, in maybe the next time. But as far as folks trying to enter the trading world, that's why I had no idea. That's why these were free. Is that they're trying to always get everybody on. Every. That's one way why traders are unsuccessful is because they're using lagging indicators. Okay. Now you could use like maybe use a eight 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 EMA, like an 8-day exponential moving average. But that there, you really got to test that as well. Like anything else, some things work and some things don't. Okay. Oh, I'm sorry, Nick. It's Nick. All right. Yeah, I see it. All right, Nick. Sorry about that, man. So, so now we're down here. We're getting oversold, oversold. Now we just bought. Uh, came out again. Hey, it's working great. Got a overbought. We didn't get the buy. We got the overbought signal again. Sold it. Got out of the trade here. Once you cross that line, if that was an exit strategy, now we're oversold again. And then, for most part on this 30-minute, you're probably doing pretty good here, right? But the main focus here is not just the CCI, is where are you going to exit? That all the trade plan has entry and exit, two exits, right? One exit is the stop, one exit is the target. And how much are you going to risk, really? Okay. So right here, if this indicator does get above, get you into the trade you're buying here, and it never crosses for your to sell, and it just continues to drop, then yeah, where's your exit? So that's another thing, is always know you need two exits. Okay. All right. So let's take a look at Bollinger Bands now. Let's get rid of this and put on the bands uh, on a 30-minute. So here, the Bollinger Bands here, this is telling more about trend. Okay. So right here, and of course you're going to test these on different time frames. We can switch it up. We can go to a daily. Go a daily here. Ooh, right here. So in order for this, okay, in order for Bollinger Bands, is that what you're looking for, if used correctly, is that you're looking for price. That is a loud car. You're looking for a price on Bollinger Bands to always go. Oops, let me get rid of this. I mean, and Bollinger Bands aren't too bad, but within here, there is some day trading opportunities in here as well. Okay. So, for example, on this right here, you're going to miss out on some profits. Tomas, how you doing? Glad you can make it. So here on Bollinger Bands, you're looking for that, right? That piercing. Okay, that pierce. So we got the piercing here. So now that I know that, okay, when am I going to buy? So I'm going to buy, because we pierced the bottom. I'm going to buy when we get a close above this EMA. I believe this is a 20. Yeah, it looks like a 20. A 20. So you bought here and it worked out well. But look, why didn't you buy down here? Okay. So you're probably going to use another indicator to help you buy. Let's see if we put the CCI and this together. Uh, let's see here. Uh, right here. So right here, so you get the cross here, right in that area, and then possibly, yeah, possibly maybe put on buy. Yeah, I don't want to confuse anybody here. All right, so once you start getting, everyone starts talking about, oh, okay, I got a higher high, I got another higher high. Oh, we got above the 20 EMA, but finally we closed above the 20 EMA. So I'm going to go ahead and buy there. Okay. And then what happens? Price drops. You bought it probably whenever it crossed 126.50. And now price goes all the way to 126.10. Okay. And then rallies the next couple of days. But, where's your stop? Where's your stop going to be? We don't know that. Weekly Forex check in. Have weekly Forex check. Oh, you mean a for swing trades, Iman? So right in there, you get a buy. It worked out really great, and now, all you're looking for is that close below the 20 MA. You got it again here. What happens? Price goes all the way back up. Okay, you get the close. You're selling in this area. Your price rallied all the way back up, and then finally, where if you're still in the trade, it actually worked out really well. But you see this, usually people are you know, already sold, took their stop, and then you get another close here. Okay. Well, now what usually happens on this 20 MA, you got to look for certain touches, right? You're looking for, okay, it crossed over here. You go maybe to let's go to a 60. Okay. So you're looking for touches. You got one. Usually in the books, it goes like this. You got one touch, two touches, and then you got the third touch. And then that's when you know you're in the downtrend, right? You got three touches there on the 20 MA. Does anybody use that strategy? The three touch? Maybe on a different time frame, right? But you see where I'm going at this. Look, I mean, you got um now you have the condition to allow you to short, right? But now you're shorting right in this area. Maybe it's working, but I know a lot of traders that used to use that. Okay. All right. So nobody nobody uses Bollinger, the EMA for the three touches for trend. This is a trend device here. The CCI trend as well. And then I know what we're going to go take a look at is the same thing, MACD. It provides the oversold, um, overbought as well. Okay. All right. All right. Let's take a look here. Let's take a look at MACD. Let's see here. Oops. Where is it? There we go. Put on the MACD. There we go. All right, MACD. Now I know folks that use MACD as well. You can see here. Let's see, bring this in a bit. Put a little more data. Oh, there we go. Bring this in. So here, what type of action are we getting now? We're well below the signal right here, right? Um, expert expert advisor for auto. I I wish there was, Iman. I know there's some prop proprietary um, tool, but that is not available right now. Yeah. Okay. So here's pound Swiss again. We're looking at MACD. All right. So we got It's telling us right here on the cross, if y'all use MACD right here. So pretty much when it crosses here, supposed to be possibly out of your, so we got the cross here on the short, I believe. So when you get the cross right there, you're getting bearish, or actually right here, getting bearish, but you don't short till they cross the signal, and that's the signal here. So the signal of overbought was here, and then you don't short until they're crossing, which was way, way, way low. Okay. If you go too fast, nah, I don't think so. I don't think it's on MetaTrader. Sharwood knows also if it were available, but yeah, at this point, no. So get a late signal here telling us to. So there's the momentum, right? Momentum's down, and now you can short because now we crossed the signal. We're bearish. Voila, great. So it's very lagging. Okay, very lagging. So now you're really into below the signal, and so you're just selling, 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 and you start asking yourself around this area here if it's still okay to short. Oops, let's see, right here, because I see that area here. You're trying to see if it's okay. Let's see if I can bring these guys together, because now you're below the. Where is this signal? Oh, there it is. So right in here. Here's your below it, right in this area, I believe, because there's the zero. So this is counting, I guess, the momentum. Okay, so it's trying to see if you're still available to short around this area, and you're still bearish, 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 and now you're getting to where now you're out of the short. Now you're looking to get long. You got the cross. Now you're looking for the signal. Okay. Now, once you get over that, now you'll be able to do a buy. So a lot of these are lagging. Okay, a lot of them. So if you want to stop being involved in the lagging indicator, want to get in earlier, yeah. Where may I learn to trade correctly? The Pinnacle Institute. We have. I'll show you some live examples why it's more beneficial. One reason is risk to reward. Okay, your risk to reward is going to be um, your targets are going to be measurable, and more importantly, if you're not going to enter into the opportunity, um, one reason why you may not enter into the opportunity is because maybe you're looking more of a higher probability. So right here, if I were a day trader, okay, if I was a day trader and I knew nothing about trading, nothing at all, or I was learning to be a day trader in this simulator account, where would I want to start? Where would I start here? Would I want to start on the once price gets above the 128.4, right around this middle? Would I want to start there? Okay. Since price is trading below all this this range here, you usually call it resistance, right? It's resistance. So I'm going to continue to sell because it's below this resistance. I'm calling this resistance, right? Okay. So if this is resistance and I'm selling here, all right, and I'm getting the CCI. Let's see, we got CCI here. Indicator, commodity channel index on the 60. All right, so I'm just trying to get. It's not time to buy. I still don't get the oversold signal yet. It's not below minus 100. Okay, so I'm still waiting to buy. Okay, Pinnacle method here at the Pinnacle Institute, we look for where all the smart money last purchased, right? We don't look for these indicators. These indicators are lagging. Haven't used a indicator in, I don't know, pretty long time. I would say last 3 years. So where are we buying? Still, there's no area to buy. Oh, there we go. So here, let me see. Should have put a line somewhere. So I just use this to put possible. So here's where, around these areas, lower prices, that's where I'm going to look to buy. Going to look for demand, right? Supply and demand. I go to weekly. It's just hard to scroll all the way back. Let's see, move here. Okay. So right here, we don't see any, right? We don't see any demand. Whoops. Until here. We got the imbalances, right? Then we got the supply up here. There's no indicators needed. How long did that take? How long do people, I mean, and these is for advanced traders, how long do y'all take to get y'all's supply and demand um, or your trade setup? That didn't take long, did it? If you're a swing trader, right? You want to do other things in life. You want to, if you're a gardener, do garden activities. Spend time with the family, with your pets. Yeah, there's no indicators there, right? Now I've been doing this for 13 years, so yeah, that didn't take long. Okay, that didn't take long to do. And then, more importantly, if you come to the Pinnacle Institute, you're going to be learning correctly. If you've been trading for such a long, see, the thing with me, I was taught wrong in the first place, so I had to relearn. So that's why, to me, it's an advantage for uh, folks that are just beginning to come out. And they're like, man, I'm scared of trading. There's nothing to be worried about. There's risk in everything in life, but when trying to do the correct and spend your valuable time on um, learning how to do something correctly, you know, this is the spot. This is the spot right here. You want to be right in this. You don't want to, because time is expensive, right? You can't get time back for sure. Okay. Did y'all like how fast that was? Yeah, and I mean, you can do this on any time frame. Let's go to a 15 minute. Yeah, let me erase all these. Okay. Here's the 15 minute. Uh, right here. So on the 15, see right off the bat, let's see if I can fit some more data here on the 15. So right here, you start seeing, more data, more data. So we got a little bit of, you know, 15-minute supply here. You got 1 24.51 to 1 24.69. Okay. So you can find it in. Now, for one thing, if you're trading, if you're scalping, this is, 15-minute for Forex. That is by far, could be a scalp. You can go into a lower time frame, maybe a 5 minute, and really narrow down your risk. But 15-minute is, since I've been around Forex for quite some time, I would rather use, nothing less than a 15-minute. Okay. So it didn't take long. It didn't take long. And I bet right now you could tell me, if I ask you this question, is there any demand right now? Do you see any demand? Does anybody see any demand? May have to dig in, may have to go a little further back. No, there isn't any demand, right? Got all this just falling from here. Okay. Let's see. So we go on the daily. Probably mess up my thing there. Now we could see where demand is, right? And look, we didn't need any indicators or anything right here. Actually, yeah, right this area. No indicators at all. We do this every day in the Pinnacle Institute, in the exchange, in the forum, on in any of the asset areas. We're constantly focusing on the foot the footprints of the smart money. Who would like to do that every day? Is being the presence of finding where all the smart money is and figure out why they do what they do. And do you think they're using indicators? I'll tell you what they're using. They got a boss. they got a biggest president of the trading division telling them where they're going to start buying. And more importantly, if we take this a little deeper, is, do you know who's on the other side of your trade? to me was a eye-opening moment when I was asked, "Do you know who's on the other side of your trade?" I'm like, "Yeah, another trader." Yeah, that's general, but is it a winning trader or a losing trader? It's the same thing as when you're stepping out onto whatever sport you're playing, and if you don't know who you're going to be trading against or playing against, and you don't have a scouting report on um, certain positions, certain players, there's high probability that you're going to lose. So that's the way I look at it, is that each and every morning we're always looking at a scouting report on where is all the um, traders that don't know the correct way to trade. Retail traders, what, like 90% are unsuccessful? Well, it's because they're doing it wrong. They read the books, the indicators. They see that, made a high here, daily high, pivot high. Oh, made another pivot high. Oh, after this one, made another pivot high. All right. So once we cross this pivot high, I'm going to buy again. Oh, we crossed it. I just bought it. Oh, man, things are great. And then all of a sudden, back in April, you got long pound Swiss or whatever asset, and you're trying to figure out where am I going to get out at? It could be here. If you're in it for the long run, probably here. And this is where looks like some of the smart money got in the market. Manu, how you doing? Nyanu. Okay, I got that right. Glad you can make it. So these are areas where it's we do make we can make things as complicated as possible. And the only reason for that is because we want to be absolutely perfect, and we may be going about this trading business the wrong way. We may be going at it to where, hey, I got to make this huge amount per day so I can stay home and quit my job. Well, that there is creating undue stress. Okay. We can't control what this chart is doing, what the smart money is doing. All we can do is find it on the chart for a high probability opportunity. Okay. All right. Any more questions? That hour went by quick. That hour went by pretty quick. Imbalances. Yeah, just real quick is that, so you're looking, I'll make this real quick. So Nick, um, if you go into, we have, there's some stores that we go to, and we try to figure out how they stay in business. How they stay in business. They're always giving us, you get a discount, or you're getting lower prices than you were if you were going to a store in your neighborhood. Okay, which they do pretty good too. Those neighborhood little gas station stores, but the ones that really do well are selling high, and more importantly, buying low. Okay, so every time I get up in the morning and I'm looking at charts, looking at any asset. It doesn't matter if it was, um, let's see, granite. Say there was granite on the exchange or something, and I could see the price of granite. Um, see a huge move or imbalance right in here, right? This is where, and Nick, so what do you think? What can cause price just keep going higher? Right here, Nick. Is it the indicator? Is the indicator going to tell us when to buy? Let's see. Let's see the CCI. Let's see right in there. It's telling us overbought. We're selling. We're selling right there. And then let's see, we're not selling again until about right here. But you worked out pretty good. So you sold. So this is what I'm talking about, is that you got here, you went above here. Okay, now you're selling when it goes back below the positive 100. Okay, there you go. So what else do you think is going on there, Nick? Yeah, there's no supply for sure, and you hit it. It's at when go in erase these guys. It makes see how doesn't it just look too busy once you put this in? I mean, I don't know. Back in the day when I used to have all these indicators, I don't know how I functioned. I really don't. I had all. It looked just tons. At least I learned the right way. But anyway, so what's really happened here is if like the McRib, so what's going on here is that um, there's no the McRib came up and then it just rallied. So really, there's no more sellers. They are gone. It's zero. There's no more sellers here. That's the only way this can go up. Is that there's no sellers. Maybe because, and that's where we get hurt. You saw in the indicators that we just got the indication to sell, and got just taken down. Okay, so you got to look out for that. Okay, and then up here is just the reverse, right? Just the reverse is that you got, what could cause this to just drop here? Like I just said, how can institutions sell at the top? Well, it's because everyone in the trading world, they look for the wrong conditions. They're looking for, okay, I got a high here. Okay, I'm not going to buy until, I got a new high here. That's 2. I got a new high here, 3. All right. So the next one, bam, you bought here. It fell. And you're like, oh man, I'm out of my trade. And you're like, okay, I'm really going to hold on this time. If we go up above this high, and we did, you bought it, everything looks good. And then, you got a lot of buyers, retail traders, unsuccessful. They're buying into supply, high prices. What does the smart money do? They sell high and they buy low. How can you you can't make it in this world if you're in a business, if you're buying high and you're selling low. And that to me was so much common sense. I'm like, this is this is uh this is good. I get it now. I'm not doing any more insanity. But then, of course, the study of supply and demand, yeah, it goes up to a different level. And now it's not so complex where it's like, oh man, I got to get out my algebra book and figure this out. No way. This is so much simpler than reading a book. I don't even like reading books. Anybody like reading books? I mean, for I do read, but it's more because I want to. It's not because back in college again, I gotta read, right? Okay. Let's see. We had Iman. What do you want to see on a high time frame? We got 3 minutes here, and to reward you, I will give you the opportunity to request a currency pair. Uh oh. I know it's lunchtime. I'll pick it. How about I pick it? Ah, you're welcome, Nick. Yeah, I mean we make things so hard. Let's do Euro Yen. Oh man, look. Oh no, you saw the trades. Oh no. So look at here Euro Yen. This is back when we um saw opportunity at supply, selling high. Here's demand. Got a little bounce here. And got some better demand below. Okay. Let's see. Let's do that was too quick. Let's do pound yen. Aha. They're getting too good. Too good for y'all. Well, y'all deserve it. Y'all deserve it. It's been a long week. And y'all are trying to get this. You're trying to learn this. I get it. And everyone's trying to show you indicators and this works and that works and buy my book and subscribe to my uh, YouTube and this, but folks, this is real. We're not going into any indicators. There's no. It's everything is what you see. It's you trade what's real, not what you feel. Oh, I feel like it's going to keep on moving lower. Look where the smart money is. It's right here. What do they do all the time? Is that they're buying low and selling high. And they're not using any indicators. Indicators are there to for you to uh, really take up your screen to see the real stuff. You want to see where all the selling is happening. Okay? You bet, Nick. Yeah, follow what's real, not what you feel. And if you want to learn more about this, love to see y'all. Love to see y'all. I want to see everyone that tries to do forex trading. To me, if you learn, yeah, take the correct and next step of your trading and stop the insanity. Learn how to trade with the smart money. Yeah, you want to protect those assets. Okay, do what you know you want to learn what's worked for many, many years, and it's simply supply and demand. All right. Shar, thanks, buddy. Couldn't do without you. Hey, everybody, hand for Shar. Shar is great, man. Shar is great. All right. Y'all have a great rest of your weekend on Friday and love to see you in here. We want to see everybody successful in this business and learn it the right way. All right. See y'all soon. Y'all have a great weekend.